Welcome to People and Profit. I'm Kate Moody. Coming up, is de-dollarization now inevitable? More and more countries are looking to reduce their dependence on the American currency. But how realistic are their plans, and just how would they work? France's credit rating is slashed after months of protests and stalled reforms. What impact does the move have on governments and borrowers? And vying to take to the skies, Chinese airlines are undertaking a huge recruitment drive as they prepare for an expected rebound in air travel. For decades, the US dollar has been king on the global stage. It's used for much of international trade and for over half the world's foreign exchange reserves. But a growing number of mostly emerging market countries are pushing for a change, saying they want to de-dollarize their economies. For example, the BRICS alliance, made up of Brazil, Russia, India, China, and South Africa, says it's developing its own new currency for cross-border trade.
Every night I ask myself, why should every country have to be tied to the dollar for trade? Why can't we trade in our own currency? And why don't we have the commitment to innovate?
Let's speak to Ruchir Sharma, chairman of Rockefeller International and founder of Breakout Capital. Thank you for being with us on the show today. First of all, help us understand, what exactly is the dollar used for on global markets, and how did it become so dominant?
Well, the dollar has been the world's so-called reserve currency for over a century now. Before that, you had the British pound. Before that, you had the French franc. And even before those other currencies, we had the Spanish currency, the Portuguese currency. So the world has always had one currency, at least over the last 500 to 600 years, where that currency has been the dominant currency in the world, in that it has been used widely in transactions around the world. It's the common use. The US has been this incredible financial superpower over the last few decades, and this happened even more so over the last decade, that even as the US share in the global economy was plateauing at about 25%, in terms of the US economy today is 25% of the global economy, the role of the US financial markets and the US dollar kept increasing over the last decade. And that, I think, has been a very unusual situation where the dollar today is used in, as I said, nearly 90% of all transactions. The US stock market today is more than 60% of global stock market value. So the US as a financial superpower has never been this powerful as it came to be over the past decade.
What kind of concrete action are we seeing towards de-dollarization?
Well, I think there are a couple of things going on. One is that nations are increasingly speaking with each other on how not to use the US dollar as a medium for transactions, which is that you have like Saudi Arabia and China talking that they trade in oil. How do they do it in a way where the US dollar is not used and they can settle their payments in each other's currency? You have India talking in a similar way with the UAE. So which is that, how do you cut the dollar out as a denominator, as something which is used in transactions between two nations? So that's really what's going on. The other thing which is happening has to do with foreign exchange reserves, which is that, as you know, that most central banks tend to hold foreign exchange reserves in other currencies, predominantly the US dollar. But over the last year or so, what they have done is that they've been diversifying and buying gold in a very big way. That the central bank holdings of gold are increasing at some of the sharpest pace that we have seen in history. So central banks from Brazil to India to China, Turkey, all these central banks are buying gold in a very big way. And instead of holding their foreign exchange reserves in the US dollar, they're holding it increasingly in gold. And so therefore, the price of gold has surged so sharply over the last few months. The trigger for this was, I think, what happened with Russia over a year ago, that when Russia invaded Ukraine, and then you had a lot of sanctions which were imposed on Russia, I think it set a lot of fear among many central bankers and policymakers around the world that, oh, if the Western nations led by the United States can do this to Russia, maybe they can do this to us as well if they don't like something that we do.
Is there anything the US can or might do to regain some of that dominance? Or do you think we're heading for a de-dollarized world?
I think that this is a very long-term trend. So, it's something which will happen gradually. The problem in the United States is that a lot of its commentators, even policymakers, believe that there is no alternative, that all these nations can whine, but at the end of the day, they have no alternative to hold the US dollar, and the Chinese currency is not fit to be held, and the euro has its own problems. So I'd say that there's a lot of complacency, if not arrogance, that the US does not really need to do anything. There is no alternative, is the mantra. And then there is also the added argument that some people believe that what's the big deal if the US loses its reserve currency status? I mean, does it really mean anything? And I think that that's a bit of a naive view because the United States is heavily reliant on foreign capital to fund its deficits, is heavily indebted to the rest of the world if you look at its foreign liabilities. But I think that these two are the prevailing views in the United States. And that, I think, is leading to a lot of complacency and arrogance. So far from thinking that what can the United States do to try and slow down this pace of de-dollarization that has begun, the US is taking the attitude that either these countries have no alternative, and so they will not be able to do much because there is no other viable currency out there, or so what's the big deal even if the US loses some of its reserve currency status? It won't cost the United States much. So I think there's a lot of complacency and arrogance rather than any call for action.
All right, lots to keep an eye on as that story develops. Ruchir Sharma, thank you so much for joining us on People and Profit today.
Thank you.
Well, next, France's sovereign credit rating has been downgraded by Fitch from AA to AA-. The agency cited months of sometimes violent protests against Emmanuel Macron's pension reform, some of which has become law in the month of April. It said that social unrest and political gridlock was hampering the government's efforts to improve public finances. Finance Minister Bruno Le Maire said the move was the result of an overly pessimistic assessment.
I believe that the facts invalidate Fitch's assessment. We are able to implement structural reforms, and we will continue to implement structural reforms for the country.
Charles Pellegrin joins us now. What exactly is a sovereign credit rating?
Well, it's basically an assessment of the likelihood of a government defaulting on its debt, and it's a very useful tool for anyone who wants to invest in government bonds and make sure they get a return on their investment. The ratings industry is dominated by three agencies, the big three. Those are Moody's, Standard & Poor's, and Fitch. And each agency has its own rating scale, but they tend to follow a similar model. At Fitch, that scale is divided in four main sections with subdivisions within them. At the top is the AAA rating, which signifies the highest credit quality. And at the very bottom is the D rating, which stands for default. Anything below the BBB- level is considered junk status.
So why do credit ratings matter?
Well, a government's sovereign credit rating directly affects the rate at which it can borrow money. A good rating will lead to a lower interest rate, while a bad rating will lead to a higher one. Germany, for instance, has a AAA rating, and it offers a 2.3% yield or rate of return on its 10-year government bond. France has a lower rating of AA-, which means it has to pay a bit more, 2.8%. A change in rating can trigger a sell-off in bonds, which can drive up borrowing costs further. This can be especially bad in today's context of already high interest rates and inflation.
So what kind of circumstances can lead to a credit downgrade?
Well, civil unrest is one reason, but a lot of it has to do with financial health, the ability of a state to generate income and to reduce deficits, which increases its ability to pay off debt. In France's case, Fitch explained that the government had overestimated its growth projections as well as its ability to enact its reforms in a tough social context. Last year, Moody's changed the UK's outlook from stable to negative after it presented a short-lived budget which included unfunded tax cuts. And in 2020, the same agency downgraded South Africa's rating to junk status because weak growth and tax revenue was going to be made worse by the pandemic. And the ongoing electricity crisis has further dampened the outlook for any ratings recovery.
Charles Pellegrin, thanks so much for that update. Well, Chinese airlines are undertaking their biggest hiring drive in more than 3 years as they prepare for an expected rebound in international travel this summer. Thousands of applicants are vying for the coveted positions as the youth unemployment rate in China approaches 20%. Monty Francis has more.
Despite appearances, this is not a casting call for a Broadway show. Chinese airlines are auditioning flight attendants, and the competition is fierce. Posing for a photo, having measurements taken, and introducing yourself to a panel of judges. It's all part of the interview process.
I'm really looking forward to getting this job. You can get out and travel and see the world. There are duty-free stores to shop at. They have so much stuff.
As demand for domestic and international travel rebounds, Chinese airlines are undertaking their biggest hiring drive in more than 3 years. During the pandemic, there were widespread layoffs in the airline industry, with the number of flight attendants in China falling by 11,000, an 11% drop. Hainan Airlines, which plans to hire more than 1,000 flight attendants this year, has already received more than 20,000 applications. The coveted cabin crew jobs are relatively high paid, and to score them, applicants need a college degree and have to pass an English language test, which is followed by an intense training period. Despite the flurry in hiring, some 11.5 million college graduates in China are facing one of the country's worst job markets in decades, with the youth unemployment rate at 19.6% in March.
A lot of graduates are choosing to further their studies, so those who choose to get a job like me are still in the minority, because a lot of people are not really that interested in this profession.
International flights have recovered just 30% from pre-pandemic levels. Chinese airlines are expecting a boost as the peak summer season approaches.
That's all for now. Don't forget you can find this and our previous shows on the France 24 website or as a podcast wherever you usually listen. You can also get in touch with your comments and questions on social media. Until next time, thanks for watching.
Worldviews. France 24 brings you all the news from hotspots around the world. And France, the Middle East, the Americas, Africa, in Asia. From Europe to Oceania, take a daily trip across borders to keep abreast of all the latest international news. Get exclusive updates from our correspondents around the globe. Our daily reports will take you to all 4 corners of the world. Every day, watch Worldviews on France 24 and France24.com.